The US dollar is swinging wildly in response to breaking news about Gulf tensions, rather than reacting to solid economic data. ING's latest analysis shows that the dollar's recent volatility is being driven by headlines about rising geopolitical risks in the region. Traders are reacting to every new development, causing sharp and sudden price moves that often reverse quickly. This pattern suggests a lack of conviction in the market, with participants reluctant to take long-term positions amid the uncertainty. The dollar index has been moving within a narrow range, but intraday volatility has surged. This is a clear sign that the market is now more influenced by news than by traditional economic indicators like jobs reports or inflation data. The Gulf region is home to major oil producers, and the geopolitical tensions there are directly affecting oil prices. This creates a unique dynamic for the dollar, which is often seen as a safe haven currency during times of global stress. However, the situation is more complex than a simple safe haven play. The dollar's role as a reserve currency means it typically strengthens. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. When global risks rise, but the specific nature of the Gulf tensions adds a layer of complexity. As tensions escalate, the market is pricing in a growing risk premium tied to the region. This means that the dollar's movements are increasingly tied to the perceived likelihood of conflict or instability in the Gulf. The volatility is not just limited to the dollar. Oil prices have also been fluctuating wildly, adding another layer of uncertainty to the market. ING's analysts note that this environment is not sustainable in the long term. As more information emerges, the market will likely shift back toward a more data-driven approach. But for now, traders are reacting to each new headline as if it could immediately change the global economic outlook. The key uncertainty is whether these tensions will escalate into something more serious, or if they will de-escalate quickly. Either way, the market is clearly pricing in the possibility of significant disruption. The next signal to watch is whether any new developments in the Gulf lead to a sustained move in the dollar, or if the market returns to a more stable pattern. Until then, the dollar will likely remain in a state of heightened sensitivity to news flow. The mechanism behind these swings is the interplay between geopolitical risk and currency demand. When uncertainty rises in the Gulf, investors tend to seek safer assets, which often includes the US dollar. However, because the Gulf is also a key region for oil production, any disruption there can simultaneously impact oil prices, which in turn affects global markets and currency flows. This dual effect, both a flight to. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Safety and a potential economic shock from oil makes the dollar's movement more unpredictable. The stakes are high for investors and policymakers alike. If Gulf tensions lead to a prolonged period of instability, the dollar could remain under pressure from both geopolitical and economic factors. On the other hand, if the situation is resolved quickly, the market may shift back to a more stable and data-driven environment. For now, the uncertainty is keeping traders on edge, and the dollar is likely to remain in a state of heightened sensitivity to news flow.